Hi, how you doing? Jack Swanson with Martha Turner Sotheby's International Realty in Houston, Texas. Again with Heath Barnes with Cardinal Financial here in Houston. Good buddy, great ski man, triathlete, stud, anyway, and a loan expert, mortgage expert. Speaking of mortgages, Heath, there are a lot of variables that a lender or a borrower can consider. I mean, we always hear about conventional, FHA. Why don't you tell us the difference about those two and some of the other vehicles that you have to get someone into a loan?
Yeah, absolutely. So, there's government loans, which are FHA and VA. So, if generally most people that are buying a home, FHA has a loan limit of $330,000. So, anything over that, you would not be able to qualify for FHA. FHA generally 3.5% down, and it's usually for someone that might have a higher debt-to-income ratio or a lower credit score. VA, if you're prior military, thank you for your service, you don't have to put any money down. And now they just changed the regulations where you can get a VA loan up to $1 million and not put any money down. So, so those are the government loans. Conventional loans, conventional loan limit goes up to 510. So anything up to 510 would be a conventional loan. Those you can buy a home for as little as 3% down on a conventional loan. That's up to 510. So a jumbo loan is anything over 510. So right now, those jumbo loans are a little bit more difficult to actually get a loan for. You need 20% down. However, if you don't have 20% down and you want to buy a home and it's $1 million or $800,000, what we do is we'll do a first mortgage conventional loan for 510, and then we'll bridge that with a second mortgage for 200 or 300 or what have you. So right now, most people don't even know that you can buy a home for $1 million and put as little as 5% down or 10% down, depending on what your credit score is, what your asset situation is. So.
And these are key points where you need to talk to the lender early in the process, because he will give you the ideas of what you can and can't do.
Totally.
And you have so many vehicles. I mean, we didn't even talk about the ARMs.
So an ARM is just an adjustable rate mortgage. And right now 30-year rate is so low, it's in the high twos. If people don't know, I mean, everybody in the country can, I think, refinance right now. So but you can do an ARM, but there's not going to be as big a spread in the rate. So an ARM, adjustable rate mortgage, means your interest rate is fixed for a specific period of time, whether it's 5 years, 7 years, or 10 years, and then you have a 30-year amortization. So it's usually a little bit lower rate than a 30-year rate, but if you know you're going to be in the house for that period of time, an ARM might make sense. But very few people are doing ARMs right now. But cool. Thanks, Jack.
It's a lot of information, isn't it?
Yeah.
We'll be back tomorrow with a little bit more. Thanks.